Okay, so the $1 million question right now is if the stock market crash, sell off, correction, whatever you want to call it, is it going to get worse? Well, we're going to break down the charts in this video, talk about that a little bit, and I want to go over 5 stocks I'm watching right now. 3 of them just reported earnings. So guys, jam-packed video. Hit the like button. Do not forget to subscribe and get your 30 stocks from Moo. The clock's ticking. You have what, 3-4 more days to get these stocks. Use that link down below or go to stocksurfest.com/Moo. Deposit at least $100. You get 5 stocks. Deposit at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY, which, guys, again, the clock's ticking. You have less than 4 days at this point to get on this deal, so use that link down below. And with that being said, cheers, let's dive into it. So it's about 10:20 a.m. on the East Coast right now, so we're not even an hour into the session, and we have a bit of red and a little bit of green. Honestly, no, we don't. Actually, now all the indexes are in the red. We saw SPY try and go green literally 2 minutes prior to me making this video, but now SPY is back in the red, down 0.05%. QQQ is down the most. It is down, let's see, about 0.25% right now. The Dow's down a whopping 12 points. Pretty much at break even, slightly leaning red though, and the Russell is down barely as well, down a point, leaning in the red a little bit. So it's not like it's a bloodbath or anything today, but it could get worse potentially, guys. As we all know, this market is quite volatile. The VIX is up around 1%. We're still pretty close to 20 points on the VIX, which is an elevated level for the VIX, right? Anything 20 or higher at this point, or even close to 20, is an elevated level for the VIX. And on the 30-minute chart, I want to show you guys this very quickly. We do have a death cross forming on SPY, even though we do have this channel maintaining, or the channel is maintaining as of now. You guys see it right here. We're holding that on the 30-minute chart on SPY and QQQ, but we are developing a death cross, which is not ideal in the short term. That could be signaling maybe more downside to come. You guys see here the 50 SMA is crossing under the 180 SMA on this time frame, and if this breaks through the channel here, guys, get ready, buckle up. We might be getting more downside. And on QQQ, let me pull this up. It's the same thing essentially, right? We have a death cross forming here on the 30-minute time frame. If I draw this channel out, yes, we're maintaining the uptrend, right? But by a thread. If this dumps under this channel, 480, dumps under 475, yeah, QQQ could potentially be getting worse from that point. So we're down across the board on at least SPY and QQQ, and honestly now all the indexes, like I said, and we're holding this channel by a thread, man, which, this is the time frame I'm paying very close attention to in the short term. And we already know we're getting rejected at the 180 SMA on the 4-hour time frame on QQQ and SPY as well, which isn't ideal overall. So we'll see. We'll see how it goes, guys. We have a couple more days here till April 2nd. Are the tariffs going to get worse, right? Are we going to see Trump continue to soften his stance? I have no idea. Nobody really knows at this point, and the market is taking it day by day, like it usually always does, but especially nowadays with new news coming out every single day. So that's kind of a rundown here on these indexes. Let me transition now to a couple of stocks I'm watching. These reported earnings, I think yesterday, right? So Dollar Tree is up 5.5% to 6% right now. Actually, now it's about to crack over 6% in the green, and we're up around $4, still trading in this channel that we've been in at this point for months on end. We're approaching now a multi-month resistance at about $75-ish per share. You guys can see we got hit there back in September, December, right? All throughout this year so far. So maybe just maybe these earnings eventually could take out or have Dollar Tree push through this resistance. We shall see. So let me see what the earnings came in at. It looks like here Dollar Tree reported, where are we at? It looks like they reported my blind here, guys. What am I looking at? So EPS on an adjusted basis of $2.11. That missed the $2.20 expected, so they missed on EPS, but I'm assuming revenue came in nicely. Where the heck's the revenue, guys? Oh, man. It's not looking good here today on the live news tab. I don't know what's going on. Okay, here we go. $8.24 billion of revenue that came in line with the expectations. Looks like they see full year 25 comparable store sales up 3 to 5%. Not bad. They expect fiscal Q1 EPS on an adjusted basis of $1.10 to $1.25 versus $1.49 expected. So EPS, that's soft in terms of guidance for Q1. It looks like here they see 25 sales of $18.5 to about $19.1 billion. All right, not bad. So really at this point, guys, trend is starting to turn in the Bulls' favor, which is ideal. We're breaking out of these moving averages on the 4-hour chart, but big but here, we're not breaking out of this level yet. $75 to $77. That's a multi-month resistance. So, well, guess what? We're going to set alerts. I'm going to put one at $75 per share. I'll do another one at $77 per share, and we'll see, if we get momentum out of there, we could be going a lot higher on DLTR. So, Chewy, CHWI, they just reported their numbers. The stock's pretty much unchanged right now, pretty flat on the day. It looks like here when they did report yesterday, we got a pop initially. Then we sold off a bit after the earnings came out. So Chewy reported earnings per share. Where is it at here, guys? Earnings per share. Come on. Let's see. Adjusted of 28 cents versus 21 cents expected, and revenue of $3.25 billion versus $3.2 billion expected. So a double beat for Chewy. Anything on guidance? They expect Q1 sales of $3.06 to $3.09 billion. That's ahead of the $3.05 expected. Not bad. EPS on an adjusted basis of 30 to 35 cents versus 17 cents expected. Not bad, man. Pretty good guidance. And they expect full year 25 sales of $12.3 to $12.45 billion versus the $12.42 billion expected. Not bad. Not bad for Chewy, and I like the chart, honestly. It's not really confirming a pop yet. We're still under the 180 SMA. We've been downtrending a bit here the last couple of months, 2-ish months at this point. But, man, we're close. We're close to fully breaking out on Chewy. We just have to wait for the confirmation, and in my opinion, that comes above $35 per share. I'm going to set my alert at $35 per share. Mark is at or above here on Chewy. Let's continue on here, guys. And by the way, hit the like button. Run the likes up on this video. Make sure to subscribe. We're on the road to 100K subs here on YouTube. And hit that notification bell. I appreciate all of you guys for tuning in as always. So, Paychex, Payx, another company here that just reported. The chart looks great. I mean, look, we're uptrending. Now with the earnings, we're breaking out of the moving averages on the 4-hour chart, and it kind of looks like, guys, we're gearing up to make this move to the top of the channel. I'm loving it, right? So let me show you here what Paychex ended up reporting. So they reported adjusted EPS of $1.49 versus the $1.54 expected, so they missed on that. Looks like revenue came in. Where's the revenue at? $1.5 billion. Not really seeing the estimate there, but that actually no, that's in line with the estimate, right? And they see PEO and insurance solutions revenue growth of 6 to 6.5%. Anything else here on guidance? Blah blah blah. Not seeing much. But yeah, not bad. I guess they, they missed slightly on EPS, but inline revenue is not bad. 2025 outlook reaffirmed, which is good, right? Especially in a rocky market that we're in now. So that is all it takes to push the stock higher. Them reaffirming their guidance. We're pushing out of these moving averages. So Paychex, Payx, I like it. Chart looks great. Let's see if this momentum continues to the mid-high 150s. What do you guys think about that? So let me go over two more here. These did not report earnings, but I think the charts look interesting. So JD.com, we've covered this time and time again. We called the breakout a couple of weeks ago, and now to me, I don't know about you guys, but it looks like we're getting ready for another breakout. We have an ascending triangle, clear as day, resistance at about 43.50. We're pretty much there, guys, and we have another cup and handle. And why do I say another? Well, it's because we called out the previous one that played out here on JD.com, and it went ballistic, right? So now we have another cup and handle. Again, ascending triangle. If we break out of $44 to use round numbers here, and we take out that 50 SMA on the 4-hour time frame here, we could be running, man. We could be running and potentially filling this gap again. Back towards 48. Well, I guess the first one's at 46. Then if that breaks, 46 was the high from around 10 days ago. If that breaks, 48, 49 is where we could be going next. So JD.com looks great. And so does Starbucks. So does Starbucks, man. We're up around 1% right now. You guys can see my alerts at 101, right above the 50 SMA, and right above the highs from last week and the week before. It looks like the overall trend is continuing. And if the market alleviates a little bit here, right, we got some green, I think Starbucks could be a runner. I think this could do pretty well for, maybe not, a move all the way back to 115 quite yet, 120, but maybe for a move back to 100, 105, quick little in and out trade. I think Starbucks looks decent. And now the markets are going green, guys. It's still early in the day. Now we're slowly going green. So again, keep your eyes on this 30-minute chart on SPY and on QQQ. Very important for overall direction and determining where we're going to go next. If we break out of, let's say, 485, 488 on QQQ, we might be running. But again, if we take out 480 on the downside, it might be getting worse. So what do you guys think? Let me know your thoughts in the comments. Run the likes up. Don't forget to subscribe. Join the free email list. That is linked down below. I send out my top stocks weekly, again, for free, and get your 30 stocks for a moo. Deposit at least $100. You get 5 stocks. Deposit at least $2,000, you get 25 more stocks, and your uninvested cash now will earn up to 8.1% APY. Again, guys, use that link down below or go to StockSurfest.com/Moo. The clock's ticking. Get on it. And with that being said, I'll catch you in the next one.